Hey, what's going on, guys? Today I'm going to talk about how you can make weekly income with selling covered calls on, stocks or ETFs. The example I'm going to show you today is SPY. It is Spider's S&P 500 ETF. The cool thing about this one and a couple other ETFs, as you can see here, clicking on the options chain, that they sell or they don't sell. You have the opportunity to buy or sell options for this ETF. I think this ETF and QQQ are the only two that I know so far. There may be some other ones out there. If there are some other ones, let me know below. But definitely SPY and QQQ. You can do this 3 days per week: Monday, Wednesday, Friday. Obviously on the holiday weeks, it's not always Monday, Wednesday, Friday. But for the most part, it's Monday, Wednesday, Friday. You can sell options on these tickers, both SPY and QQQ. And selling covered calls, it may not be the best investment strategy for you. But the cool thing about it is there are some requirements. Well, first of all, there are some requirements for doing the strategy. You must have 100 shares of this ETF, or you must have a long call option, meaning you have the 448. Okay, you could sell the 455. I mean, typically you wouldn't do that. That's a call debit spread. Or if you had like a long, like a leap or something on SPY, where it was like expiring, several months from now, like March of next year, you had a long call option of 440. It's going to cost you $4,600. But then essentially each week you could sell calls against this long position. But for this example, which is definitely a lot better, actually, going back to the phone call, going back to that call, it was only like $4,000 to own the right. What was it? It was we were looking at. I think we were looking at 440. Yeah, so $4,600. Um, to control 100 shares of SPY. That is definitely a lot cheaper than just buying 100 shares of, the this this particular stock. So $45,000. So if you want to do that, that's a completely different strategy. But for this example, um, we're just going to assume you have 100 shares or you have $45,000 worth of SPY. But this is obviously scalable with others. So say you want to do like a smaller stock or a smaller price stock, you can do that. The same strategy applies. You have to own 100 shares or a long call option. But with that being said, I'm going to assume you either have one or the other. And then essentially what you could do, let's go ahead and do this for Monday since it's already Friday today. But what you would do, you would sell, depending on the strike, options can be quite advanced. So it's hard for me to say like to sell a particular strike because there's just so many different variables that go into options, and the market can move so quickly as we've seen so far this year and in the past. But from a high level speaking, what you do is you sell these call options. So selling it, you're going to get a 4 cent credit, which equates to the bid is at 3, so it equates to $3. So in order to make $100, I mean, I think it is kind of hard to really predict, a consistent amount each week because, like I mentioned, there's so many different variables that go into options. But if you wanted to even be like very safe, you could sell something with like a low delta. Do keep in mind this delta can move really quickly, so don't think you're selling an option that's 95% probability that you're always going to win, because there are sometimes where there is that 5% chance that SPY could just rally huge next week and invade this short strike price that you're selling the call on. But from a high level speaking, you pick a strike that you're comfortable with. This is Monday, so it's you have a long weekend, but um, you pick whatever ticker you want, and then you click sell, and then that would be the extent of it. You would get a $9 credit. I think Robinhood just rolled out a new update where they default your price to the bid. You can see here the bid and the ask are, yeah, it's fluctuating a little bit, but The cool thing about SPY, there is a lot of volume with this ETF. That's another thing to keep in mind. If you do decide to do, tickers with less volume, it can be, more challenging as far as getting in and out and finding buyers for these options too. So SPY QQ, they have tons of volume, so you shouldn't have a problem, finding buyers for these options. But yeah, so then you would do that. You would sell the call option on Monday. Up until I think it's 5 o'clock, people have the opportunity to exercise this option. So you will be obligated up until 5 p.m. I know the market closes at 4, but do just keep in mind of that. But then after 5 p.m. the next day, you can essentially then turn around and sell one for Wednesday. So obviously, the closer you get to expiration, these are going to decay and get less and less in value. Um, but yeah, so then you would turn around, you would sell another one, and then you would collect $12 as long as this strike doesn't hit, as long as this ETF doesn't hit your 464 strike. And then once again on Friday, you could do the same thing, sell another one. So yeah, it's just another way that you can create weekly income from your shareholdings. Another way to leverage. Options are all about leverage. So yeah, some things to keep in mind. If your stock or ETF pays a dividend, that you definitely want to stay away from that ex-dividend date, because a lot of times people will early exercise these options. Um, if it's close to the money, just because they want that dividend, and you have to own the stock or ETF on the ex dividend date to receive that dividend. So, say the ex dividend date is tomorrow. Sometimes option buyers may, early exercise these contracts to, to get the shares, so they would be eligible for that dividend tomorrow. So, do keep in mind of that as being an option seller. That is something that you have to be aware of. And as always, I'm not a financial advisor, so do seek more education, whether it's self-education or professional advice from someone that's certified in this expertise. So that's pretty much it. I just wanted to briefly talk about covered calls in um, a way that you can quickly, sell covered calls, and create weekly income from your positions. Do keep in mind the risk. Obviously, if you sell at 365 and QQQ shoots to 370, do realize the opportunity cost and the gain that you are missing out on. So if you sell a covered call, yes, you're getting $58, but this is the most you're going to get. Most you're going to get for your shares. So 365.60 compared to, if it shot to 370, you could have just not sold the covered call option and just sold a limit order and made that additional money there. So do keep in mind the risk of covered calls. There is no risk-free strategy out there. So do keep that's in mind there. But yeah, guys, that's it for this video. I just wanted to show you how to sell covered calls, and another way that you can create weekly, monthly, annual income in the stock market. One of the greatest places that you can grow your wealth and create income from is the stock market. So yeah, guys, that's it for this video. I just wanted to show you guys that and give you some value for how you could create weekly and monthly income from your positions. So that's it for the video. Feel free to like and subscribe below. Help us get to that 1,000 subscriber limit. We are getting pretty close. But yeah, guys, that's it for the video. Thanks for watching.